Oh man. All right. Well, I'm starting the recording now. That's too bad. I missed most of the stream. I'm gonna get like a 20-minute stream at best. Um, Sidetracked on what I was talking about here, but yeah, this downtrend right here was a great place to be in there because you knew that it was going to bounce. So I do think it was a legit bounce, and I think the offer to buy it was legit as well. Let's see. You can pull from the VOD. I don't know what the VOD volume on daily or something like that. I'll have to. I don't know what VOD actually is. Um, yeah, let me close this. Let me get this chart back to where it was before. I gotta minimize it. Oh no, we're on the other grid. That's why. Okay. Okay. Video on demand. Oh yeah, you can watch it on the video on demand. That's right. That's the other thing I like about Thinkorswim is they have the on-demand feature, so you can go back and actually watch the price action during the day, which is nice. Twitch saves all your streams that don't get strikes. Oh, on Twitch. Okay, good. All right, because I've been recording it through OBS Studio, so good. Actually, I need to talk to you a little bit because it said that you couldn't really put videos up if you're not a partner, but you have videos up, and I didn't think you were a partner, so you're gonna have to show me that a little bit later. Okay, so back to Wendy's. I got to finish this up because we're getting towards the end of the stream here, and I got to get going in a bit. Creator dashboard, just download it. Yeah, I'll check that out later. Okay, so the Twitter, the Wendy's move. This was wonderful. I was buying calls right in here, both accounts, going for it. Wasn't expecting it to happen this quickly, but it did. So this was a wonderful move, and I like the fact that I was emphasizing it last week on the streams because that shows that gives me some street cred right there, which is great. But what I'm waiting for with this Wendy's move is maybe a little bit of a retracement, not a whole lot because if they are going to buy this out, that's bullish, and the price will go up because of that. But if I'd like it to trend down a little bit so I can get back in. I do like that same price target of like 21, 22 for the long run on this thing. We'll have to see if that actually ends up panning out, but that's I want it to dip a little bit so that I can feel a little more confident about getting back into it. But right now I might just miss it. Like that's kind of my thing. If I make gains on anything, I take my gains, I get out, and then I just sit there. You could play it for more, and a lot of people do, but it doesn't really work for me that well. So I usually just get my money and get out. That's for me. That's the best way to go. Because when I try to do more, I end up losing. And to me, it's like whenever you have gains, just be happy you have gains. Don't be greedy and take a bunch. So I took my gains on Wendy's. I still have one spread in case they keep going. That spread can't be all that profitable, but at the same time, at least it's something. So I like that. So I'm going to keep watching Wendy's and we'll see what happens from there. So next, what do we got? Oh, Snapchat. This was a big one this week. So I don't know who was following the social media space, but Snapchat just came out of nowhere and guided down. I mean, they already reported their earnings back in April. It was like April, what, 18th or so? So they already, told us what they were making, and and gave us guidance, and it didn't look that good, but it wasn't terrible. So they just kind of continued their trend with the market. But the other day, let's see if I can find the actual quote. What day was that? So let's see, 76, 25, 24. Let's go to like 24. Let's see. Snap's gloomy forecast prompts debate over trouble over broader advertising market. So let's see. Major market indexes end mixed after Snap issues Q2 revenue warning. All right, so that's what they did. They came out and they said that all right, we're not gonna pull in as much revenue as we said in our last reporting session, which that is extremely bearish. Which is why the stock went from 22 to like 13 the next day. It has been trending up, so if you got a bounce on this, that wasn't bad. But this ended up pulling the whole social media market down. Like look at Pinterest, that got hit because of it. Let's look at Twitter. Twitter, well, Twitter's doing its own thing. It didn't. I mean, it's more in the Elon Musk camp right now, so it didn't move as much. Facebook did though. Let's take a look at Facebook. See, Facebook recovered its gains, but that crash just annihilated it. And this is what I like about the social media space. Like they all kind of trade in tandem most of the time. I mean, obviously there are exceptions like Twitter with it in its own world right now. But what I like about the social media space is if something really bad happens to one and it tanks the whole space, you have an opportunity. I was busy with Wendy's on this day because I believe this would have been Tuesday, right? Yeah, Tuesday. So I missed it. Yeah, Tuesday was when I was looking at Wendy's. Monday was when I missed it and I was doing other stuff. So I was preoccupied with Wendy's to even notice this. But what I would have done if I had noticed that Facebook was getting crushed because of Snapchat was I would have gotten some calls because Facebook has a totally different, I mean, not a totally different, but they have way more streams of revenue than Snapchat does. I mean, Snapchat considers themselves a camera company, like a physical hardware camera company, which is funny to me because to me, it's all about that app and the things that you can do with that app. You can, number one, use it as a phone, so you don't have to buy a phone plan. You can just have your phone, have Snapchat on it, and contact anybody that's on Snapchat. And really, you can do that with any social media service now. You can do it with, Facebook Messenger and stuff like that. Um, but Snapchat has a utility for that. It also has a utility for sales. People can sell content and get paid on Snapchat. So to me, it's not the camera, it's the app. But I mean, they have to classify themselves in some fashion or whatever. Like there may have been a reason why they said camera company instead of social media company. Maybe they didn't want to be in the book with Facebook. But guess what? They are because they move with Facebook. And this would have been such a good trade. I mean, look at a couple of days, you're back right up to where you were. Especially early in the day, if you could have really gotten it at any time. But that's what I like about this. So Snapchat pulled everything down. Facebook had already guided down when they had their earnings in April, and you know what's going on with them. So their bad news was kind of baked into the market. So that downtrend was a perfect opportunity for it to bounce right back, which I thought it would. It took a few days, but that's kind of what happens. So that's what always keep an eye on the social media space. If one of the smaller apps crashes Facebook, then Facebook is a buy. And it depends upon what the news is that's crashing it. But something like that, like Snapchat guiding down their own revenue, is a great bounce for Facebook. So that was a nice little thing right there. Let me see what I got. So yeah, Snap, they filed an 8K with the SEC saying that they were guiding down. So this isn't just an announcement to the market as like a courtesy. This is a like they actually have to tell shareholders they think this is going to be terrible. So they put that in there. They guided down farther than in April, and all social media stocks were hit. So I like the space as a trade if it gets hit again. Like what I'm waiting for is the next earnings season. Like right now, if we look at the calendar, so let's go over to the calendar here. We're in May. We're towards the end of this. I mean, you can see the big days like 400 companies reporting, 600 companies reporting, or no, it's 500, 300 up here at the top of the month, right? Right, like the first, second, third, fourth. There's a lot in there, and then the next week there's quite a few. But if you look at the ones coming up this week, there's a bunch of ones I don't even know. Like let's see, I don't know any of these stocks. Well, LX, but these are all. And then what about these ones? A bunch of stocks I don't know. Oh, I know Gamb, um, a few of them. So we're basically we're at the bottom right now. This is all the bottom feeding stuff. So I'm not thinking about this earnings season anymore. I am thinking about next earnings season, which is July. All right. So July, towards the end of July, you see there's like 700 companies reporting on that Thursday. There's 400 companies reporting on that Wednesday. This is where it starts to get big, juicy again. So right now, we're kind of exiting last earnings season. We're entering kind of a dead zone because there's a saying, sell in May and go away. That's an old stock market saying because a lot of people will do that. They'll sell towards the end of the second quarter and then they'll go on vacation and do their thing. And then when they come back, it's usually towards the end of the third quarter, beginning of the fourth, when there's a lot of readjustment going on. So there's usually some shakiness in September. So basically, what I'm looking at with this whole thing is shakiness all the way up until the end of the year. We've got those rate hikes, and then we've got next earnings season, and that's what I'm waiting for with the social media stocks. I want to watch the social media stocks for next earnings season. So if you're keeping plays out in the future, keep an eye on Facebook, Snapchat, Pinterest, and Twitter. Maybe exclude Twitter until their deal goes through, because I don't know what's going to happen with that. If it even does go through. But right now, it's being kind of shielded from those market moves. But Pinterest, Snapchat, and Facebook, I'm watching them. I want them to go way down before next earnings because if we have all these down guidance, we have all these companies guiding down. There's room for a surprise upside, and that's what I like. Like all of these companies that are reporting in the retail sector, in the tech sector, whatever you pick the section, they're reporting their earnings are down and they're guiding down for the next earnings season. So in July, we will have gone through the next couple of rate hikes at that point. We'll have a better idea of what the Fed's going to continue to do. So hopefully, things will be priced into the market to a point where we can maybe start recovering a little bit. What it'll depend on is earnings. If revenue, or not revenue, if profits are up a little bit next earnings season, we're going to have an explosion in price action because everyone's so down right now. Everyone is guiding. They're guiding into the toilet. So we have to expect that these companies are going to slowly drop over time because of that. So what we're waiting for is a chance to jump back in at a better price, and that's what I like about next earnings season. So that's why I'm watching late July, early August. Right, the middle of the quarter is usually when earnings season is at its hottest. So that's kind of what I'm waiting for with that. So if next earnings season we can see some better profit margins from different companies, then things will look really good. So what I really like the social media space for that because thanks to Snapchat, they've basically made everyone's perception of social media. Uh, they've basically told everybody that social media is not going to do well, and they have room for a surprise now. And even if it doesn't happen next quarter, then I'm looking at the quarter after that. So basically, any time in the future that earnings start to turn around is going to be a really nice opportunity. And companies like Snapchat, see, Snapchat's a huge mover. That's one thing. It's right now it's super cheap. Snap. It's super cheap. It's $15. It hasn't been that cheap in a long time. Let's see, where was the? Let's see, this 22, 21, 20, 19, 18, 17. Um, yeah, it's basically back to its 2017 prices, and it was dumping in 2018. It was people didn't think anything of it. By the end of that, it was like 482. Wow, that would have been a great place to get in. But you can see how fast it moved. This yellow line, I put this yellow line in years ago. It was the old top of the where Snapchat IPO'd. So that was the goal, is to get to that line. But look what happens when it actually did hit that line. It exploded upwards. And I find it funny because Snapchat is a huge stock. It has 1.6 billion shares. For whatever reason, it moves like crazy. See, that's what's really interesting to me. I don't normally see companies with that many shares moving that quickly because there's just a lot of supply. But what that tells me is there's probably a high level of institutional ownership. So let me go to Snap here on Yahoo Finance, and let's take a look at the actual statistics and see what the institutional ownership is of it. 66%. So two-thirds of it is owned by institution, and only 10% of it or 9% of it's held by the insiders. So the float, what do we have? Short percentage right now. As of May 13th, the short percentage is not that big, but now it's probably gone up because of that announcement and that squeeze. It's slowly trended up after that. Like there hasn't been a squeeze, so let's go back to the actual thing. So there hasn't been a squeeze yet. This was a huge dump. People probably were thinking about shorting it some more in this, and they might be in here, which I don't think would be a good idea because it's already come down so much. Um, I like this for a future bounce. I think in the next it's going to follow the market for a little while because now it's been hit and people need to adjust to that. So I think in the future this could be a good trade. But right now I'm just watching it. So social media is something I want to keep an eye on for the next earnings season. They're a place where things could pop. The other thing I'm looking at for next earnings season is retailers like Target and Walmart. They came down so much that if they pick up, look, their chart looks a lot like Snapchat, doesn't it? They reported had these horrible down days, and it's slowly been trending up because it looks like the selling might be over. So the selling for these events has basically taken place. So we would need new information to drop it even more. But I like Walmart as a for as a long position in the future. So yeah, Walmart, Target, the social media space, they're all looking good for future pumps. I'm not going to buy them yet though, because we have a good amount of time. There's still a couple of months. I mean, next earnings season starts, in like, well, it technically starts at like the end of June, but the meat of it doesn't happen until the end of July. So we have about 2 months. A little less than 2 months before we're going to move on any of these things, but it's looking good. So retail and social media looking really good. Okay, let's go back to Twitter real quick before we get out of the social media game. So Twitter has some interesting stuff going on as always. I haven't been watching it as much this week. We've got the shareholders are suing Elon Musk. They think that he pumped the stock and kind of dumped it on them, and so they're suing for that. And I think it has to do with the fact that he bought shares and got upped his stake to a highly reportable amount before um, the before he filed, and let everybody know. So like he filed late. He bought everything and put everything in before, after he should have. So they're suing for that, and because they're saying he's pumping and dumping, which he kind of was a little bit. Let's see. Also, the SEC is investigating Elon Musk because of that same thing. So it's not just the shareholders. Like there's some stuff going on with this whole deal. Like Twitter, it looked like it was going to be really simple at first, but it's become this big complicated thing, which is why I'm not messing with it. I mean, I have those calls that are dead in the water, but I mean, that's when you have options that are dead, you don't dump them, right? You don't get your $2 back or whatever it is. I don't want my $10. I think that thing's worth like $6 at this point. I don't want my $6 back because if that thing turns into a $500 option, I'm going to be pissed that I took $6 out of it. And if I lose $6 more, I don't care. That's fine. I'm already on the hook for that. So I put I put the amount in that I was okay to lose. That's what I was talking about earlier. You want to trade with the amount that, like, always trade as if you're going to lose. So if you put an amount of money in, you have to be okay if 100% of it's gone. And that's what I did with these. So the fact that there's like $6 left in that thing, I'm fine. I'm just going to let it, I'm going to write it into the grave. And if Twitter sells and, like, let's say the bots are better than they think, the bots are less than 5% and the value actually looks really good and there aren't as many fake accounts as we thought, which is not going to happen because we've already had a bunch of people analyzing it and saying it's the opposite. But if that does happen and it goes up, then great. I'm going to have some calls that are going to be worth a good amount of money. But in reality, they're dead. They expire in July and they're going to expire worthless. I will guarantee you that. But I'm going to write them anyway. So anyway, that looks like the last thing with Twitter, the board member Egon Durbin, he was voted out by the shareholders, but he said he's not going to leave. He's actually holding on. So there's Twitter's a mess right now. I'm surprised it's even holding where it is. But I think that's what's going on. I think there are a lot of people that are suspecting like Musk was doing this to make a short squeeze, which I kind of thought he might be at first. I mean, it seemed like he was ready to come in and buy it, and then suddenly he's like, "Oh, what about the bots? Oh, what about the fake accounts? Oh, what about the free speech aspect? All this other stuff." So part of me thought, okay, that's just him trying to squeeze it. But this has been going on long enough where I don't necessarily think it's a squeeze. I think he's actually wondering about these things, and he is being investigated by the SEC. He's being sued. So this is a complicated mess right now. So we're just going to leave it at that. So we're done with social media for the week. So the next thing I want to talk about is Amazon. All right, so if anybody is following Amazon, they have a split coming up next week. I'm sorry, the week out, so 2 weeks. Their split is coming up on this. So they're not this Monday, but next Monday, Amazon is going to have a 20-to-1 split. Now, I don't know if this split is going to go as crazy as the Tesla one did. In fact, I don't think it's going to go as crazily as Tesla did back in 2020. But I do think as long as there is positive movement in the markets during that time, we can get a little bit of a pump. And that's why I've been buying in. I've been buying fractional shares of Amazon uh, into every time it dips low like this. I was getting it at like below 2100, I think. I think my average is a little bit above 2100. But the stock's at 23 right now, so my shares are up. I'm happy about that. I bought like towards the bottom too. Part of me kind of thought about selling a little bit of it like I did with Tesla just because I'm still kind of predicting that there's going to be some down movements next week or two. But my plan is I'm trying to own enough of it to sell off some shares when it does split. But right now I'm holding. But it's looking good. So let's see. What did I write down? This is the last week before split. All the shareholder resolution. Oh, that was the other thing. So there were a whole bunch of shareholder resolutions they voted on for Amazon that all failed. Every single one of them didn't pass, and a lot of them were like, better treatment for the workers and better working condition and like stuff that Amazon really should do, but none of it passed. So I mean that's kind of positive for stocks because that means they're not going to have to pay a bunch of money to fix things. But at the same time, that's just going to mean that these battles they're having are going to continue, and it's probably going to be more expensive later when they eventually do resolve these things. Because I guarantee you, just like with Starbucks, anytime a company is having a dispute with workers over anything, something has to be done. Like sometimes there are frivolous disputes, yes, but when you have a company as big as Amazon and you have a backlash as big as they have, then there has to be a resolution. So the fact that none of this stuff passed, and yeah, I granted not all of those resolutions had to do with things that would benefit the workers. In fact, like a bunch of them didn't. But the fact that it didn't pass just tells you that there's still a lot of work to be done. So these people aren't going to just go and be like, oh, well, I guess we're not getting what we want. No, they're going to fight harder. They're going to keep going. So there is going to be some kind of resolution in the future. It just hasn't happened yet. But if you're thinking about making any moves on that split, this is the last week to do it, because the Monday after this Monday, it splits, and that's when that's when the move will happen, if it's going to happen. Like with Tesla, it split and it ran up for like 2 or 3 days before it had that crash down, from like the 500s to the 300s. So you might have some time. I don't think Amazon is as popular or as Tesla is in the media right now, so I don't necessarily know if that's going to happen, but it's something to watch. So if you're looking at that split, as I am, keep an eye on it, and this is your last week to make whatever moves you're going to make. So that's kind of what I'm doing. I'm going to try to buy a little bit more, and then I'm just going to sit on it and see what happens. If it doesn't go up or anything, then I'm just going to hold the shares. So my plan is, like, if it's a really nice up move, I'm going to take my profits quickly. But if it's not, then I'm just going to hold the shares, because I actually do want to own Amazon, and Tesla. I also want to own Apple. But who doesn't? Apple's like the best stock in the market. Okay, so talked about Amazon. All right, so it's kind of a difficult one to talk about. I'm just going to talk about it really quick and then move on. There were a lot of tragic events that happened this week, and because of that, there was I think there were two school shootings. There's one big one in Texas, and I think there was another one. If it wasn't last week, it was the week before. But anytime something like that happens, you could check out the gun stocks and the sportsman stocks, because a lot of times those stocks will move up on legislation, and these things have led to legislation. There is already gun legislation in the books in the United States, but now there's let's see, New York has a gun legislation, or a gun bill that will allow people to sue the companies that make the firearms if something like these mass shootings happen, which for the gun companies, that'll be extremely terrible, because they're going to have, they would have to pay a lot of money to a lot of people, and it's basically going to cut their business down if something like that actually does pass on a federal level. They might either just stop selling firearms in the states or the places where those bans are happening, or just move to another country altogether if they can. I really don't know. But if you're looking for a trade, anytime there's gun legislation or there's a mass gun crime in the news, stocks like Smith and Wesson, SWBI, and Ruger. Let's do this, SWBI. See, this is what happened. The legislation came out. There was a shooting. Boom! It pumped like that. So you can pretty much guarantee that any of these gun stocks on any legislation will pop. And you may think, okay, why is it that on a legislation that's limiting guns, do gun stocks pop? All right, hold on. I got a thing over here. Still baffled that guns are still legal for the general public for no reason in the U.S. It's a crazy thing here in the U.S., man. It's not going to be solved anytime soon, but it's kind of the main issue right now. And I was thinking about it, and the reason that you see gun stocks pop anytime there's legislation or something like this is because of the whole quote, "they're coming for your guns" mentality, right? So anytime something comes out that says, all right, we're going to limit guns in some way, people go to stores and buy guns quickly before any of this stuff happens. Let's see, people day more in random gun shootings more than words. Um, Sorry, I'm having trouble deciphering that one. You might have to retype that, Future Space G. Um, Anyway, but my point is, because people are afraid that they are going to either have their guns taken or they're not going to be able to buy guns as easily anymore, people rush into stores and they buy guns. So sales go up for gun makers when this kind of stuff happens. So you'd think they don't like it because, oh, that would these legislation is bad for them. No, usually they do like it because it pops their stock. It makes people come buy their guns, which then the bots all go, oh, something like this is happening, buy gun stocks. So you can make a trade for these very, very quickly. Like if you see something like that coming down the pipeline, which you could have for the past few days, because I think there was another incident, and there was some legislation being discussed throughout the past week. So if you got in on Smith and Wesson, or let's see, Ruger RGR, you could have got this pump right here, and you actually had some time to do it. And that's why I wanted to mention it, is because it wasn't an instantaneous thing. I mean, it happened that morning, but like leading up to it, if the talk about these things. Um, allowed you to get in. So look, if you're looking for trades that are somewhat easy, those are the kind of trades you can get. I don't. It's sad though, because I don't like dealing with that kind of stuff. I don't like having to talk about those kind of things. So I don't want to spend too much time on it. But let's see. People die more in random gun shootings in the U.S. than in conflicts, wars in other countries. Yeah, the gun crime in places like Chicago, New York, like really big cities, they have horrible gun crime. It's out off the charts. Like it's not bad in the rural areas and some of the area. It's mostly in like the really big cities, and and especially where there's like, and the other thing is where there's like crazy gun legislations. A lot of times there's a lot more gun crime in those areas too. So that's why you can see like the big cities are just they're packed with that kind of stuff. I'm glad I don't live in a big city because I mean that kind of stuff scares me. But anyway, let's move on. I just wanted to mention that real quick because even though it's sad and it's hard to talk about, those are almost guaranteed trades you can make if you're quick enough. I don't watch those stocks regularly. I basically only see them when something like this happens, when there's legislation or whatever. But if I was paying attention, I could have made money on that one. Okay, so let's moving on. A couple more before I got to get out of here. It's getting a little late. So Ford, they're paying 19.2 million to settle a false advertising claim from like 2011 to 2014. They said their C-Max hybrids they had better fuel economy and can carry more than it actually could. So they're settling and for the models from like 2011 to 2014 on C-Max hybrids and Super Duty pickups. They were already recalled, and they already sent checks to some of these people, to pay them for whatever the recall amount was. I don't really know what the specifics are on that, but it's in the news again, and it hit Ford a little bit, but since it's old news, it was I think I saw it around one of these days. See, it didn't really do anything because the market was moving up, so this would have been a good opportunity if Ford had dropped to get some calls, because Ford, it's a very heavy company. Even though it's been in a downtrend for quite a while, it still has it's going to hold the teens pretty well, I would think. Like it'll probably drop into because it used to be like a $7, $8, $9 stock, until it got popular again with electric cars. So I can see it coming back down to where it was. Like if we look at the chart, it's kind of hitting its little zone of support right here. This is where the highest amount of volume is over the past, like 20, 30 years, whatever that is. So it's looking like this might be a good place to find some support. But if it doesn't, then I'm looking at 9. But I don't think this news really was going to do anything because it's old news. They'd already kind of paid for most of it. I don't know why it was coming out again. I think there was more to it. They like maybe the case was officially settled. But from what I could tell, they already paid a bunch to deal with it. So if you see something like that, Ford, dropping heavy on news, that something was recalled and they already paid for it, that's a great dip to buy. I didn't. There was no dip, so I didn't get a chance to. But I wanted to mention it because it's a cheap stock. It's a reliable stock as far as its movement. So when you get something like that, it's a good one to grab. The other thing we had was Dollar General and Dollar Tree, DLTR, Dollar Tree. Oops, DLRT. Oh, DLTR. That's what it is, Dollar Tree. They had a nice upward movement because they reported and they did well. So this was the part of retail that surprised everyone. So everyone looked at, you know, uh, what's Target and Walmart and those stocks and thought, oh man, they did terribly. Some of the other like off-brand stores didn't do that well either. So I thought, okay, this is bad. But Dollar Tree came out and did pretty well. So they had a nice little jump on that. And I was actually kind of predicting that. One of the things I thought about Dollar Tree was they raised their prices. They're no longer a dollar a pop for everything. It's a dollar 25. And last quarter, I was looking at a pump from them because they had mentioned that not all of their stores had the increase. But every single time, like I went into the dollar store, or there was two of them, I think no, there's three of them in my town now. So I went to two of them because I forgot the other one was there, and they both had the dollar 25 price increases. And the company was saying that they hadn't fully rolled it out yet. So my thought was like, I'll bet most of them already have that dollar 25 amount, but they just haven't announced it yet because they're saying they're rolling it out up until April. So my thought was maybe their profits will be a little bit better than they actually predicted, and they were. I was actually looking for it at this last earnings season, and nothing really happened with it. But afterwards, it did really well, and we had this market drop, which is what brought them down. But they pumped right back up because they're doing well. I mean, look at that earnings report pumped up. They're happy. So a lot of that money that went out of Walmart and Target and Amazon went into the Dollar Tree and Dollar General and the discount stores. So the economy wasn't quite as bad as we thought. So this was a good one, man. It's too bad I missed this one because I've been watching Dollar Tree for quite a while. I could, I didn't even notice that they dropped when the retailers dropped because this would have been such a good opportunity to get in on that. And the fact that they had earnings coming up later, like if I had known about this would have been a perfect trade for me. But I didn't even think about it. There's been so much other stuff going on. I was dealing with Wendy's, I was dealing with the market, Twitter and Snapchat. It's just so much going on. I missed it. So yeah, those were good. I think, let's see, I got Macy's on there. I don't care about that. All right, last thing I'm going to talk about before I got to go. So this is the final point. Canopy Growth, CGC. They reported they had a pretty big revenue miss. Actually, no, it's not that big of a revenue miss. They were projected at 129.9 million, and they came in at 126.1. So their revenue was under what was estimated. And last year's revenue was 167 million, so they're under that. They're definitely way down from last year. The EPS, and here's what killed them though. The EPS is negative 46 cents, I believe, or is that a dollar 46? I can't tell. Can't tell with my writing. I think it's 46. There's got to be one that'll tell you right here. Q2 revenue, a dollar 46. Okay, so it's negative a dollar 46 a share, and the estimate was negative 30 cents a share. So they destroyed that EPS estimate. I mean, that's terrible. They missed it by so much. I'm surprised they only went down as much as they did. I mean, they had pumped up a little bit and went from five back, or yeah, the high fives down to the high fours. So they just did not do well. People are not buying cannabis, and let's see, some of the other stocks got hit too. But what was interesting was Aurora ACB, a stock that is one I would never buy, but it's a big company. They announced that they're doing a financing that's a $150 million financing, which means they're selling shares. They are going to dilute their share pool to make money because they need it. So let's see, ACB. What is their share count right now? So they have 200 million shares. That's not too bad. I don't know. Let's see. They said it was going to be like. I'm gonna have to get the calculator out and do a little math here. Let's see how dumb I am. All right. So they went 150 million. Divide. What did they say? It was going to be like 240 a share. What was it before it dumped? Yeah, 240. So let's see, divide that by 240. So they're going to add about 62.5 million shares into that to make money. That's not terrible. I mean, going from 220 million to 280 million, maybe let's just call it 300 million to be safe. I don't know exactly what price because it could have been at a lower price, but I could have sworn I saw $2.40 was the financing price. And if they're raising $150 million, then yeah, they're going to have to add about 62.5 million shares. So that's not terrible. It's enough to where it tanked the stock, and the stock's going to stay low for a while, but it could recover at some point. So but ACB is one I don't really trade. It's in my ETF. I have the YOLO and the MJ ETFs, and it's in both of those, I believe. Which is good because it's a big company and it does actually produce a lot of product. So it would be good to have them. But, they have not done very well in the stock market over time. They've diluted their shares. They've misrepresented some of their filings and stuff. So they're a company I wouldn't want to own outright, but I do like this as a future trade. So right now, what we're getting in the market is a whole lot of down moves. We have all these companies just tanking, and that is so good because we have potential, right? Like my big potential is for now is again I'm going to watch Amazon because that's the closest thing I have. But in the future, I'm watching. Cannabis and I'm watching social media because they've been beat up so bad and they're due for a run at some point. Once we get through all this heftiness of the Fed and the supply chain and all that, I think those categories have space to run, which is why I like them for future trades. So, all right, that pretty much covers everything I was going to talk about. If there's any stocks you want to talk about, any comments, any questions, pop them into chat now. Otherwise, I'm going to have to get out of here. It's been an interesting week. I'm glad I last week I was kind of complaining that I wasn't making any money. It had been a couple of weeks since I did something, so it's very nice to actually have gotten a win on Wendy's much sooner than I thought, and it was not as much as I was hoping for. But hey, it's something. You thought I logged? No, I didn't log. I was quiet for a second, I guess. Um, Game's off. All right. Well, I'm about done anyway. I got to get going. It doesn't look like there's any other questions, so it was nice to actually have a win this week. And thanks for joining me. Hopefully, I'll see you again next week, every Sunday at 3 o'clock Pacific, 6 o'clock Eastern U.S. I'm here doing the market open, going over the stuff for the week, talking about what I'm going to do next week. Just a quick recap. I'm watching Amazon. I'm watching the social media things, but that's a little bit later. I'm going to be watching Dollar General, Dollar Tree for the future if they have any drops, and cannabis. Cannabis is hammered. It's going to be down for a while, but I'm looking at it for a long-term trade. So not a whole lot going on. We're getting into the point where try during the weekend. Yeah, I know it's not going to happen. We're getting to the point where there's not going to be a whole lot going on. So these streams are probably going to be a little bit more boring as time goes on, for the next month or so. But there's always something, so it's not going to be completely boring. So I don't want to say that. I just want to say the market is going to be boring. The streams are going to be entertaining and fun, as they always are, and as I'm going to continue to make them. So I'm going to get going now. It was great having you all here. Thanks again for tuning in. Hopefully next week we'll have something interesting to talk about. But really, there's not a whole lot going on this week. Just kind of watching Amazon for that split and seeing what else comes up. So keep a watch list of yourself and bring it next week. Let's see, let's talk about some stocks, and I'm gonna get going. So thanks again. Have a good weekend, and I'll see you next week.